In this video, we are going to cover how I make $8,000 a week options trading. Let's go over the basics of options trading, but first, while watching this video, make sure you sign up to tastytrade using the invite link in the description. Make sure you use that one and start the process of signing up. The call option. This gives you the right, but not the obligation, to buy an underlying asset at a specific price, which is also known as the strike price, before or on a certain expiration date, usually meaning that you think the price will rise due to your own analysis and price action. A put option. This gives you the exact same right to buy or sell, but not obligated to, at the specific price or by a certain expiration date, usually meaning the price will go down using the same strategy as before. An options contract is including the strike price, expiration date, and contract size, which is usually 100 contracts. The underlying asset, you've got to be familiar with it, whether it's a stock, index, commodity, or currency pair. You need to cover some option strategies. You need to study various strategies like covered calls, protective puts, and straddles, strangles, iron condors, and more. You also need to understand the risk management associated with options trading, including the potential for loss of the entire premium paid and the impact of market volatility. You need to develop a method for analyzing the market and making informed predictions about the future direction of an underlying asset. You also need to choose a reputable broker like tastytrade. Consider the factors like fees, commissions, and trading tools. tastytrade on some trades have $0 fees, and when they do charge fees, it's a very minuscule amount. Now let's get into the video. Diversifying your investments is a fundamental strategy to manage risk and optimize your capital. Placing all your money into a single investment or contract can be risky, as it leaves you vulnerable to potential losses. Contracts, whether in trading or in other investment forms, can experience periods of decline before recovering or turning profitable. By spreading your capital across multiple platform contracts or investments, you reduce the impact of a single loss on your overall portfolio. The key concept here is to follow a diversified investment approach. Instead of putting all your capital into one contract, consider entering multiple in different assets or strategies. This approach can help you maximize your capital by spreading it across various opportunities, each with its own unique risk and return profile. Diversification minimizes the impact of potential losses on your entire portfolio while increasing your chances of overall profitability. This is very crucial when you're starting out, because then you can test multiple different strategies while you're learning. The benefits of this also include risk reduction, the potential for consistent returns, and the ability to weather market fluctuation more effectively. It is essential to research and analyze each potential investment or contract thoroughly to ensure that they align with your financial goals and risk tolerance. By diversifying, you can enhance your financial resilience and improve your chances of long-term success in the world of options and trading. Leveraging the power of price action analysis to make informed decisions in the stock market is considered by many experienced traders to be one of the most reliable methods for entering options trades. Price action analysis is rooted in the belief that the historical price data carries valuable insights into the future price movement, as it forms the cornerstone of my own trading. My approach is centered around identifying specific patterns and signals in the price movement of stocks, particularly focusing on the occurrence of squeezes and the analysis of market momentum. For traders, understanding market momentum is a key aspect of price action analysis. When bullish momentum gains prominence, it signifies that the buyers are asserting their influence, making it an opportune time to consider entering a long position. Conversely, when the market exhibits a sign of bearish momentum, indicating that the sellers are prevailing, it serves as a signal to contemplate buying put options. The magic of my strategy unfolds when I spot the interaction between momentum and price behavior. A crucial juncture in this process is the recognition of market squeezes. A squeeze transpires when the price of a range stock narrows, creating a coiled spring-like effect, such as periods of consolidation are followed by a breakout, which can either be upwards or downwards. The key is to employ various technical indicators, chart patterns, and meticulous analysis to pinpoint these squeezes accurately. The success of my strategy does not rely on a single aspect, but rather combines multiple facets of price action analysis and a deep understanding of market psychology. This approach is not only about predicting price movement, but also about risk management, setting stop losses for orders, defining risk-reward ratios, and carefully sizing my trades are all part of my intricate puzzle that ensures I protect my capital while aiming to maximize profit. By continuously fine-tuning my strategy, staying attuned to the market conditions, and being adaptable, I strive to make it the most powerful method of trading in the world of options. Utilizing a reliable trading platform is a fundamental to success of any options trader. In my case, I use tastytrade, and I recommend you do so too. It is an exceptional choice. Its user-friendly interface and robust features simplify the trading process, making it one of the most accessible platforms available. One of the key strategies I employ within options trading, and which tastytrade accommodates seamlessly, is the strangle strategy. This versatile approach involves the simultaneous sale of an out-of-the-money call option and an out-of-the-money put option. The primary objective behind employing this strangle strategy is to profit when the underlying stock remains within a specific price range. A range is defined by the strike prices of the short call and short put. The beauty of the strangle strategy lies in its ability to capitalize on the neutral market condition. When you anticipate that the stock in question is likely to maintain its current trading range without experiencing substantial price fluctuation, the strategy becomes an invaluable tool. In such cases, both short call and short put options will expire worthless. If the stock indeed stays within the premeditated range, the consequence, you stand to make a net profit. A scenario that is always welcomed by traders. What sets the strangle strategy apart from other approaches is that its immunity to double-sided risk. It's simpler terms, meaning you won't find yourself in a situation where you lose money on both the call side and put side of the trade. This inherent feature provides a sense of security to traders employing the strangle strategy. tastytrade's user-friendly interface, combined with its support for strategies like the strangle, empowers traders to use the tools needed to navigate the complex world of options trading. As I continue to explore and fine-tune my trading approaches, having a platform like tastytrade by my side makes the journey much more efficient and rewarding. While you can find numerous instructional videos on YouTube explaining the intricacies of the strangle strategy, tastytrade offers a distinct advantage by seamlessly incorporating it into its platform. This integration simplifies the whole process of executing the strangle options, making it an incredibly convenient and efficient for traders. One of the standout features of tastytrade is its fee structure, which is notably favorable to traders. The platform boasts remarkably small fees, as I was mentioning before, making it a cost-effective choice for those engaging in options trading, and as well as buying actual stock. For certain positions, tastytrade even goes a step further by charging $0 in fees, further enhancing its appeal to traders looking to maximize their returns. Don't forget, sign up down below with the link in the description. You should have already been going through it now and be halfway through your process of an application. The combination of user-friendly features, accessibility of the strangle strategy, and competitive fee structures make tastytrade a top choice for traders when looking to streamline their options trading experience. This platform equips traders with the necessary tools to execute their strategies efficiently while optimizing cost effectiveness. As I continue to explore the dynamics of an options trading, tastytrade remains a reliable and supportive companion in my financial journey. Calculating potential profit is a crucial step in options trading process. To simplify this calculation, you can use a tool like Options Profit Calculator, a website dedicated to precisely this purpose. With the Options Profit Calculator, you can input the details of your trade, including the strike price, contract quantity, and premium costs. The calculator then generates a comprehensive breakdown of the potential profit or loss based on the market's movement. By using this tool, traders can gain valuable insights into the possible outcomes of their options trades, helping them make informed decisions and manage risk effectively. The Options Profit Calculator provides a clear visualization of your profit scenarios, ensuring you have the data they need to optimize your options trades and strategies to achieve your financial goal. With all that combined, Options Profit Calculator, tastytrade, and my strategy, all these three things are what I do every single week in order to make $8,000 while trading options. Now, you're not going to be like me. You're not going to make $8,000 a week. You need to start from somewhere. You need to find a strategy strategy, fine tune it to yourself, implement your risk management strategies, and then grow your account from little money, and then slowly start growing up. When you have $10,000 in the bank account, then you can decide to pull out anything you make over that. For example, if I make $15,000 in 1 week, I take $5,000 out. But it is all up to you. Thank you for watching this video. Remember, sign up using the link below, and I'll see you in the next video.